So let's talk about now some strategies that you can use and we can use to mitigate these psychological biases. So the first one is just having self-awareness and educating yourself on what these are and thinking about, like I hope that you were over these last few minutes about, what am I most apt towards? What bias am I most apt towards in my thinking process or with my feelings that might cause me to make mistakes? Like
maybe somebody that, they watch TV or listen on the radio or internet or whatever, and some news stories cause them to fear and panic and want to sell something that they maybe probably shouldn't be selling. So,
and when you have the self-awareness to realize kind of what's going on when you feel that way or feel the urge to make an investment decision based on some way you're feeling or something like that, it gives you kind of more power over that decision.
Yeah. And so, a strategy, one of the best strategies is to have a plan, implement a disciplined investment strategy, come up with a plan and stick with it. Plan for volatility in your investment ahead of time and invest accordingly, according to your own risk tolerance and your tolerance for how much it can go up or go down. Invest for the long term. If you're a retiree or a near retiree and you're whatever 65 years old, just because you're retiring now doesn't mean that you're done, that your money is short-term money. Your life expectancy at age 65 is probably another pretty near 20 years. And then that money's maybe going to go to your family. So it's long-term money. Stay diversified. That's another strategy, is to be diversified. There's also strategies where if you're really uncomfortable with market fluctuation, there are different investment products you can buy or invest in that have insurance features that protect you for income or protect your family for a death benefit. And they charge a little bit for the insurance in there, 1 or 2%, depending on what you get. But that's a way of having a strategy to keep yourself from making the wrong decision at the wrong time. Plan for when you're going to make potential changes ahead of time. Like if this macroeconomic thing happens, if this big macroeconomic thing happens, I'm going to do this. For instance, an example of that is right now, because of all this high inflation, we've seen interest rates going up. And they're kind of in a pause right now. And the pause, we think, is because it's an election year. But after that election gets over with, I'm very confident that the Fed is going to keep raising interest rates. They have to, because that's the only tool they can use to head off inflation. So here, my point about microeconomic situations, when interest rates get up real high, like maybe they did in the early 80s, late 70s and early 80s is when this happened before. And if interest rates get up to, let's say, 12% on a 30-year treasury, we're going to advise our clients to move some of their money out of companies and into 30-year treasuries, paying 12%. You say, well, why would I want something for 30 years if I'm whatever, 70, 80 years old? Well, that's not how it works. You can sell the 30-year treasury any business day. But remember this thing with this teeter-totter of interest rates over here and market values of bonds over here. When those treasuries are at 12% and you buy them, pretty soon interest rates are going to go down. When the interest rates go down, through the years, you're going to get 12% on your treasury investment. But when the interest rates go down, say 5 years down the road, to more normal levels, you're going to be able to sell the treasury at a big gain, maybe 20% plus gain. So that's what I mean by having a plan ahead of time, like the plan that we have for the clients' accounts that we manage, having a plan ahead of time for certain macroeconomic conditions.
Yeah, and there's really two situations that you need to have a plan ahead of time for. That's if the macroeconomic situation changes and if some big circumstance in your life changes.
Right.
Those are the only two. It's not if something changes in the market, because we don't make investment decisions based on these short-term market movements or what the market's doing. If you make a decision based on what the market is doing, you are already too late.
That's
So
right. That's
you need
right.
to, that's why it's really important to have a plan ahead of time and stick to knowing when you're gonna make a move.
The final point of strategy, of having a strategy, is to watch where you get your advice. Some of the worst places to get advice is coffee shop talk. Because although the people you're drinking coffee with, your old buddies, are great to drink coffee with and tell stories about the good old days and all that stuff, that's not the best place to get financial advice. A lot of times people fib to each other about how well they've done on their investments. Don't follow the coffee shop talk. Those guys aren't experts at investments. They might be experts at talking and drinking coffee, but they're not, and they might be great friends, but they're not experts at investments. Don't pay any attention to the news media. The news media is selling news. They're not financial advisors, even if they're on a financial news channel or they put themselves out to be a financial person. They're not. They're selling, what they're selling is your attention to get you to keep watching or listening through the commercials. We recommend to people to seek professional advice from competent and trustworthy financial advisors, and see if there's a fit between the financial advisor and you and the way you think. And that's what we do for our prospective clients and for our clients. So a good financial advisor can help educate you out of cognitive biases and encourage you to overcome those emotional biases.
Yeah, it's about much more than just helping you invest your money. It's about helping guide you to not make investment mistakes
Yeah.
as well. In addition to, I mean, we help with tax planning, estate planning,
Retirement income planning, all kinds of, anything to do with money, we help our clients with. And we'd love to help you. And do we have any questions?